Stock of the Day is brought to you by IG, Australia's #1 CFD provider. Trade over 17,000 markets with extended trading hours on key US shares and competitive spreads, all on an award-winning platform. Get started at IG.com.
And the stock of the day is Appen. Appen is raising $50 million through an underwritten institutional placement. It wants to invest more in generative AI as its market shows signs of improvement. It's also out with a trading update telling the market its underlying earnings have turned positive and says that it's now cash earnings positive after cutting costs. Shares are at a trading halt last I checked. But guys, I chose Appen because on our program in the afternoon, the COB, we often have Appen as either one of the best performers in the small to mid cap space or the worst performers. Of course, this has been a very troubled company, but it seems to rise, when you get a little bit of enthusiasm for tech in general. Is there anything, Dean, in today's announcement that would reassure you or bring you in as an investor?
Yes and no. I find today's announcement quite contradictory. I don't understand how a business that previously had, I think, 35 million in cash on its balance sheet, so pretty well funded, and they're just saying, hey, we've just gone profitable, our business is improving, they've got cash, now they're saying, can we have another 50 million bucks? That says to me this profitability is only short term. They're going to be throwing a lot more money into R&D. Now, maybe this is a feed the ducks while they're quacking. Maybe it's sort of just careful capital or whatever, but I just kind of don't understand. If you're saying to the market, we're going profitable, then and you're well funded, just stick with it. Don't dilute the shareholding by trying to take more money that sounds like you don't necessarily need at the moment. That's sort of my broad assessment on today's raising.
Mm-hmm. And Appen as a company, as I mentioned, it was one of the storied wax stocks. Do you remember that when we talked about the wax stocks on the ASX? And then, I think the penny dropped that perhaps its AI was in fact humans backing the AI and lost key customers as well. Would you put client money into Appen today?
Look, clearly they lost a really big client in Google, and I think they still boast that they've got kind of something like 1 million data coders around the world sort of verifying what the AI generative data is putting out and correcting it. So there's a market there. I think importantly for Appen, they're growing their underlying revenue base ex-Google, and that's really positive that they are trading profitably. It's one of those stocks, it's in such a hyped sector, and businesses that are doing good stuff there are incredibly highly valued. You could argue that in a global marketplace, their current valuation of $500 million Aussie dollars with growing revenue is actually quite reasonable in a hype space. On any traditional metric, it doesn't make any sense. So it's definitely not one I'd say, go into, but it's pretty well funded at the moment. So I think there's worse businesses out there to invest in.
Got it. Thank you. And Luke, what's your view on Appen?
Dean touched on something I picked up straight away as well. It's a business that had plenty of cash in the bank and coming to the market and saying we've sort of stabilized the operations post Google. So a $50 million raise here, you sort of raise your eyebrows when you see it. I think Dean's right, though. You look at that chart on the screen and to me definitely feels like conditions are good for us right now. Let's get 50 mil while we can. Look, I think the shine has certainly come off Appen. We saw the longer term chart before. I think the market, as you said, Nadine, is well and truly keyed onto the fact that these guys aren't a direct beneficiary of AI, their products aren't directly using AI. It's that picks and shovels type play, and you see it in the gross margins. Gross margins are still 37% or something like that. So, it's tied to it, but it's not directly in that space. There's certainly some better ways to play it. Look, for me, I go back to what I said before across the small mid-cap section across the market, this is extremely expensive. As Dean pointed out, $500 million, and revenue growth ex Google is okay. It's nothing to blow your socks off, but roughly break even. So this is the sort of thing I'd be avoiding it. If you're someone who had the stomach to catch this, it's been a 10-bagger from the lows, quite amazingly. If you're someone who's captured that, well done to you. But here, I think you've got a management team taking advantage of a hot share price, and I've still got questions about how sustainable the business model is, and maybe management do as well, given this sort of large investment they're looking to make beyond where they are today.
Okay, so that is a sell if you're in it. Take some profits?
Yeah, I would actually. I'd certainly at least take some profits. As Dean points out, it's a hot space, and so this is a share price that can go higher. Maybe take profits is the best way to do it. You've had a really good run here, and I think management raising capital is the ultimate sort of confirmation of that.
Yeah, Dean, would you hold it if you were already in it, or would you take some profits as well?
Look, I mean, if I still held it, we don't hold it, I'd probably be sticking with it. Yeah. I just think, despite, and I may be even contradicting myself here, but I think often the trend is your friend with these things. And look, I kind of want to keep coming back to fundamentals and valuations, and definitely agree with Luke that it looks expensive on a traditional basis. But these things, if they're going up, they're going up. And if they're going down, they're going down. So there's positive momentum there. This is a stock that's had the most wild ride. It's gone from $2 to 35 to 20 cents. Back to $2. It's on a bit of a run at the moment. And I look at other businesses that are going well that I think are crazy expensive, like Pro Medicus at $100 was ridiculously overpriced. It's now like 160 or 190. It's just like it kind of doesn't matter what they're valued at. But again, in context with that, like, well, we think it's too expensive because we're raising money we don't necessarily need. That might give investors a bit of pause to lighten.
Yeah, got it. All right. Well, guys, thank you so much. That was our stock of the day, being Appen.
The stock of the day was brought to you by IG. Trade over 12,000 shares and ETFs, including major tech giants with extended hours on an award-winning platform. Get started at IG.com.